For as long as most of us can remember, the US dollar has been the king of the hill, right? The undisputed champ of the global economy. But what if that's changing? Today, we're diving into the really high-stakes game the dollar is playing and why it's facing its biggest challenge in, well, a generation. So this is the big question, isn't it? The one you're probably seeing in headlines everywhere. Is the dollar's reign finally coming to an end? You hear all this talk about de-dollarization and a new world order. But look, before we can even begin to understand where we're going, we have to go back. We have to understand how the dollar got this powerful to begin with. All right, first up, let's talk about the unchallenged king. And this is going to sound a little strange, but stick with me. To see the dollar's potential weakness today, we first have to grasp its almost unbreakable strength in the past. And the craziest part? Crises? They actually made it stronger. So this really got going back in the 90s with something called the strong dollar policy. The Treasury Secretary at the time, Robert Rubin, he was a big champion of this. And the idea was pretty simple, really. A powerful dollar was great for the US. Why? Well, it kept inflation low, which means prices at home were stable. And it acted like a giant magnet for foreign money, which helped fuel that whole dot-com boom. It was this policy that really cemented the dollar as the world's go-to safe place for cash. And then 2008 happened, and this is where it gets really weird. A huge financial crisis started right here in the US housing market. You'd think that would have just crushed the dollar, right? But nope, the exact opposite happened. When the world started to panic, everybody, and I mean everybody, needed US dollars more than ever. Just look at the numbers. At the absolute peak of the crisis, the U.S. Federal Reserve pumped out $600 billion in emergency loans to other countries. These things are called swap lines, and they were basically a financial lifeline. Think about it. Banks from London all the way to Tokyo were just desperate for dollars, and the only place they could get them was the Fed. For all intents and purposes, the Fed basically became the world's central bank overnight. So the big takeaway from that whole mess is this. The 2008 crisis proved beyond any doubt that when the world economy is on the brink, there is just no substitute for the US dollar. No substitute. Its dominance didn't just seem strong, it seemed absolute, essential even. But here's the thing about absolute power. It can be very tempting to use it. And that leads us right into our next section. What happens when that financial dominance gets turned into a political weapon? Let's talk about the king's new weapon.
And look, this wasn't some slow, gradual thing. This was a series of really sharp moves. It started back in 2012, when the US pressured the SWIFT payment system. That's the network banks used to talk to each other to cut off Iranian banks. That was a huge deal. But then, fast forward to 2022, and the game changed completely. The US and its allies froze about $300 billion of Russia's central bank reserves. That wasn't just a big move. That was like the financial nuclear option.
And that one action, right there, created what you could call the risk-free asset paradox. See, for decades, everybody knew that U.S. Treasury bonds were the safest investments on the planet, period. But when the world saw the U.S. freeze another country's reserves, it sent a massive shockwave. Suddenly, if you're a country that doesn't always see eye to eye with the U.S., those risk-free bonds start to look, well, a lot less risk-free and a lot more like a political problem waiting to happen.
This moment really did fundamentally change everything. Before 2022, a U.S. Treasury bond was like the world's ultimate safe piggy bank. You put your money there, you knew it was safe. After 2022, well, it's still a piggy bank, but now you know the owner can decide to lock it with a single signature on an executive order. The whole idea of risk, it just completely changed.
So, what do you do if you're a country watching all this and you're worried that the king's new weapon might one day be pointed at you? You start building your own armor, right? And that brings us to the next phase, the seeds of rebellion. We started seeing nations creating what are basically geopolitical insurance policies, trying to protect themselves from the power of the dollar. Now let's be clear, if you look at all the money central banks around the world hold, the dollar is still the heavyweight champ, no doubt. It's sitting at around 59%. But that's not 100%. It's not even close. The other 41%, split between the euro and a bunch of other currencies, well, that shows there's a lot of room for other players to grow.
And this whole rebellion, you could say, is happening in three main ways. First, countries are buying up huge amounts of physical gold. Second, they're building totally new payment systems to go around the US. And third, they're just starting to trade more with each other using their own currencies.
Let's just zoom in on the gold part for a second because this is wild. In 2022, central banks bought a record-breaking 1,136 tons of it. So, why? It's simple, really. A physical gold bar, sitting in your own vault, has no counterparty risk. No one can freeze it with a keystroke from halfway around the world. It is the ultimate financial insurance policy.
And then you've got the high-tech answer to this problem. There's this project called mBridge, and it is fascinating. You've got the central banks of China, the UAE, Saudi Arabia, and others, and they're all connecting directly to each other. They're using these new things called central bank digital currencies, or CBDCs, to settle payments instantly. And the key part? It all happens completely outside the normal US-controlled banking system. It's literally a parallel financial universe being built right now.
Okay, so you've got gold buying. You've got new payment systems. What does this all mean? Where is this heading? That brings us to our final section, a new world order. And let's be really clear here. We're not talking about a sudden, dramatic collapse of the dollar. It's something much more subtle, but maybe just as important, the end of its monopoly.
You know, if you look back at why countries held the reserves they did, you can see this incredible story. Back in the 70s, the main reason was the old gold standard. By the 2000s, it was all about the booming U.S. tech economy. But look at today. The main driver now? Weaponization and sanctions. For the very first time, the biggest reason countries are changing their strategy is purely geopolitical, not economic. And what's the result? Well, you can see it right there. Gold is back in a big way.
So again, the really crucial takeaway here isn't to expect some sudden crash. The market for US debt is just too big, too liquid, too trusted for that. No, it's much more likely is that we're heading towards a more fragmented world, a world with different monetary zones. You know, maybe the dollar is still king in one part of the world, but over in another, they're using their own systems more and more.
And this all leads to a really interesting conclusion. There's this famous phrase, the exorbitant privilege. It's basically all the huge benefits the US gets because the dollar is the world's main currency. Now, that privilege isn't just disappearing, but the price of keeping it is going up. Every time the dollar is used as a weapon, it gives everyone else a really powerful reason to start looking for a backup plan.
So here's the bottom line. The dollar's absolute monopoly, that's over. The era of real competition has begun. And the big question now isn't just who's going to win. It's what does a world with several powerful currencies even look like? The game has definitely changed. And what happens next? Well, that's anybody's guess.